Stop looking at the Federal Reserve nominee. Stop looking at the interest rate dot plot. Stop looking at the noise on your television screen. Look at the price of gold in the last 48 hours. It just crossed $5,015 per ounce. This number is not a trading signal. It is a death sentence for the paper economy. For decades, the financial textbooks told you that when interest rates rise, gold falls. They told you that a hawkish Federal Reserve is bad for precious metals. This week, the market took that textbook and burned it. We just witnessed the nomination of a hardline hawk for the Federal Reserve chair, a man who built his career on defending the dollar. By all logic of the old world, gold should have collapsed. It did not. Instead, it violently rejected the narrative and surged to a new all-time high. This is the moment the correlation broke. This is the moment physics defeated finance. The market has realized that an interest rate of 5% or 6% means nothing when the supply chains that keep civilization alive are being severed by kinetic events. Gold is no longer reacting to the cost of money. It is reacting to the probability of survival. The price you see on the screen is not inflation. It is the fear premium of a world that is running out of water, running out of ships, and running out of time. But $5,015 is just the surface fever. The real infection lies deep in the copper mines of South America, where a new war has just begun. You need to understand why the algorithm is panicking. It is not because of what happened in Washington. It is because of what happened in the Atacama Desert in the last 24 hours. At the Mantoverde mine in Chile, the definition of a strike has changed. In the past, workers stopped working to demand higher wages. That is a financial dispute. It can be solved with printing money. What is happening now is a biological dispute. The striking forces have seized the desalination plant. They have not just stopped the trucks. They have turned off the water. In modern mining, water is more critical than dynamite. Without water, you cannot process sulfide ore. Without processing sulfide ore, you get no copper. And more importantly for the monetary metals market, you get no silver. Silver is a byproduct. It is the slave of copper mining. When the copper stops, the silver stops. The intelligence reports confirm that chemical stocks at the mine are critical and operations are suspended. This is a kinetic attack on the global supply of strategic metals. You cannot print water. You cannot print a new desalination plant in the middle of a desert. The market sees this. It sees that a handful of people controlling a water valve can hold billions of dollars of global GDP hostage. This is the fragility of the just-in-time efficiency model. It works perfectly until the moment it breaks completely. And right now, across the mining sector in Chile and Peru, it is breaking. The gold price at $5,000 is sniffing out this shortage. It knows that the paper contracts on the COMEX exchange are backed by nothing but air and promises, while the physical metal is trapped behind a blockade of thirsty miners. But the resource war in the mountains is only half of the equation. If you cannot get the metal out of the ground, that is a problem. But if you cannot move it across the ocean, that is a catastrophe. While the mines are dying of thirst, the shipping lanes are walking into a trap. In the last 48 hours, the Gemini Alliance, comprising two of the largest shipping giants in the world, made a decision that reeks of desperation. They announced they are restarting the route through the Red Sea. They are sending commercial vessels back into the kill zone, escorted by naval warships. You must ask yourself why. Why would they risk billion-dollar assets and human crews in waters that have been declared a war zone? The answer is not bravery, it is bankruptcy. The route around Africa has failed. It is too long. It is too expensive. It burns too much fuel. The shipping lines are bleeding cash, and the global economy is suffocating under the transit times. They are forced to return to the Red Sea not because it is safe, but because the alternative is economic suicide. This is a binary gamble. They are betting that a steel hull can withstand a hypersonic variable. They are wrong. The intelligence indicates that the opposing forces in Yemen have spent the last 2 years studying, adapting, and stockpiling. They are not firing warning shots anymore. They are hunting. The moment a Maersk vessel is tagged by a drone or a missile, despite the naval escort, the insurance market will vaporize. The risk premium will go to infinity. This is what gold is pricing in. Gold at $5,015 is telling you that the Suez Canal is effectively closed, and the attempt to reopen it is going to end in fire. When the supply chain snaps this time, it will not be a delay. It will be a severance. Inventory levels for essential goods, for electronics, for medical precursors are already critical. The market knows that the next kinetic event in the Red Sea will trigger an inflationary tsunami that no central bank interest rate can stop. You cannot raise interest rates to shoot down a drone. You cannot raise interest rates to make a ship float. The tools of the Federal Reserve are useless against kinetic physics. That is why the dollar is rallying and gold is rallying at the same time. The dollar is rising because there is a liquidity crunch. Gold is rising because there is a solvency crunch. The system is liquidating everything to survive, but it is hoarding the only asset that does not have counterparty risk. But there is a deeper layer to this collapse. The spike in gold is not just about fear, it is about insider knowledge. Look at who is buying. The reports confirm that central banks are projected to buy 800 tons of gold this year. But the most telling signal comes from the belly of the beast itself. JP Morgan has raised its target for gold to $6,300. Think about what that means. These are the architects of the paper market. These are the entities that have suppressed the price of metals for decades to keep the fiat dollar looking strong. When the suppressor flips and becomes the buyer, the game is over. They are admitting defeat. They are admitting that the fiat experiment is entering its terminal phase. They see the debt walls, they see the mining deficits, they see the naval blockades. They are telling their high net worth clients to exit the system while the exit doors are still open. They are front-running the public. They know that when the price breaks $5,000, it is not a ceiling, it is a floor. The psychological barrier has been shattered. The algorithm has switched from sell rallies to buy dips. This is a structural regime change. The divergence between the paper price of Bitcoin and the physical price of gold in the last 24 hours is the final piece of evidence. Bitcoin fell below $73,000 while gold soared. This is the flight to quality. In a world of electricity shortages, internet blackouts, and kinetic warfare, digital assets are a luxury. Physical assets are a necessity. The smart money is rotating out of the speculative casino and into the bunker. They are buying things that exist without a server. They are buying farmland. They are buying water rights. And they are buying gold and silver. The drop in silver inventory at the London vaults is flashing red. The float, the amount of silver actually available for immediate delivery, is dangerously low. When the industrial panic sets in, when Apple and Tesla realize they cannot get the silver they need because a union in Chile turned off the water, the price of silver will not just rise, it will gap. It will teleport from $87 to $100 in a single session. The short sellers who are trapped in these contracts will be liquidated with extreme prejudice. We saw a preview of this when the exchange raised margin requirements to 15% this week. It caused a dip, but the dip was bought instantly. That is the behavior of a market that is structurally short of physical material. The paper games are losing their potency. You are watching a slow-motion train wreck of the global order. The mine in Chile is the engine failing. The ship in the Red Sea is the bridge collapsing. And the gold price is the siren screaming. Most people are deaf to this siren. They are looking at the stock market making new highs, fueled by nominal inflation. They do not understand that the stock market is measuring the devaluation of the currency, not the growth of the economy. If you measure the S&P 500 in grams of gold, it is crashing. You are becoming poorer while your account balance gets bigger. This is the hyperinflationary illusion. The archivist is telling you to look at the physical reality. Look at the water pipes in the Atacama. Look at the insurance rates in the Gulf of Aden. Look at the vault withdrawals in London. These are the hard metrics. They do not lie. They do not care about political nominations. They only care about supply and demand. And right now, supply is zero and demand is infinite. We are entering a period where the price of everything essential will be reset. The $5,015 price tag on gold is just the market trying to find a clearing price for trust. There is no trust left. The United States Navy cannot guarantee safe passage. The Chilean government cannot guarantee water access. The Federal Reserve cannot guarantee the value of the dollar. When guarantees vanish, gold remains. It is the only asset that is not someone else's liability. The escalation is here. It is not coming next year. It is happening in the data from this week. The restart of the Red Sea route is the trigger, the strike in Monteverde is the accelerant, and the vaults in London are the empty fuel tank. Do not sit there and watch the numbers change color. Do not listen to the pundits telling you it is a bubble. A bubble is when price exceeds value. This is not a bubble. This is a repricing of reality. The window to convert your paper promises into physical reality is closing. When the first ship sinks in the Red Sea, or when the next mine declares force majeure, the dealer will not pick up the phone. The buy button will disappear. You will be left holding digits while the institutions hold the metal. Now comes the audit. I want you to stop lying to yourself. I want you to open your safe or your drawer or wherever you claim to store your wealth. I want you to count the number of physical ounces of gold and silver you possess, not the paper contracts, not the ETFs, not the mining stocks, the metal you can hold in your hand. If that number is 0, you are a casualty of the economic war that has already begun. You are a volunteer victim. Do not write a comment telling me about your crypto gains or your stock portfolio. I do not care about your paper profits. I want the number of ounces. Write it down. If you are ashamed of the number, good. That shame is the only thing that might save you. Fix it before the price hits $6,000. The simulation is live. The archivist is watching.